Okay, why don't we go ahead and get started? So my name is Leslie Mulligan. As I mentioned before, I'm a board member with the Village Support Network. Here with me today, we have a number of other board members, and some may trickle in as well. Kathy Cox, our treasurer. She is in Florida enjoying the sunshine and 40-degree weather here. The rest of us mostly are in the Maryland area, so I hope everyone dug out of the snowstorm today. I didn't ask Rob actually if he's been extra busy with any insurance claims coming in the last few days, but maybe that's in the future. He can tell us that. So we have Kathy with us. We also have BT Thomas as well, and Katie Ostrowski, who is on the board of VSN, but also works with Trish Evans for the city of Rockville and supporting all the villages there. So thank you, folks, for joining this morning. And I'm happy to host this workshop with you. We had a very successful one back in November with social media, and I think people learned a lot. I know I did just sitting through that. So we hope that this one is as impactful, completely different subject, but our intent, of course, is to be hosting these kinds of workshops for the things that you might have burning questions for. So as always, feel free to put in the chat or email us separately if there's something you'd really like to learn about. Social media was a great topic. Insurance, particularly this time of year, also important, I would think. So anytime you have a topic that's of import to you, you can drop it in the chat. We'll take note of it, or just drop one of us an email after the fact. So we're going to go till 11:30, although I know some people might be time limited and cut out around 11. We're going to try to make the presentation conclude before 11 so we can get to Q&A. Should you have questions, feel free to drop them in the chat. A few of us will be monitoring it and can interject and ask Rob to cover something, or make sure we cover it at the end of the session, towards the end of the 10:45, 10:50, and get to the Q&A. Many of you sent in questions in advance, very helpful. So Rob has already seen those questions and will be, I think, addressing them throughout the presentation. But if anything else pops up, feel free to drop it in the chat. If something's really burning and you need to know in the moment, go ahead and use the react button, raise your hand, and we'll stop and we'll call on you and make sure we're addressing it in the moment. So other than that, I'm going to share my screen. I'll be actually driving the presentation. So Rob and I will do this in tandem. Hopefully everybody can see my screen. Okay, so we have with us somebody with decades of experience in insurance, I'm happy to say, Rob Cannon at Gorges and Company. So we're happy that he's here. Many of you may have seen him in other instances. I know he's been supporting the Village movement for a number of years, and commercial corporate sectors even beyond that. I'll let him continue his introduction of himself, but let us welcome Rob. And one last comment, I guess housekeeping I should have said before, if you're just new to this, please feel free to rename yourself so we see what village you're with, as well as the state that you're in. And if you have struggled to do that, no worries, we may do that for you, but we just want to get this rolling. So let me turn it over to Rob.
Thank you very much, Leslie. I appreciate the opportunity to join you with this, and I'm glad to see that there is a good turnout of attendees. So we try to keep this pretty casual. So yeah, if you really want, to be heard during the presentation and it's relevant to the topic, I'm happy to try to address those issues. You can tell from my picture here, this was taken back in the day when we dressed like this, but since COVID and the weather, we all get a little more casual here. But the goal is to leave this session having learned something, hopefully not, be terrified about the risk, but to have learned what's practical and what you should be considering based upon where you are. And probably every one of you are at a different place, in your evolution as a village. So we're going to have some folks that probably have no coverage and no volunteers, and others that may have lots of employees and lots of people that are being served. So we're going to try to address all of those types of situations. So, as I said, feel free, and as Leslie said, feel free to name yourself so we can know a little bit more about you. So we're going to touch on about 5 or 10 different types of coverage. So that in itself may be a little bit of an eye opener. And there's probably kind of an evolution of the types of coverages that you should be considering at different stages of maturity. So people will say, when do we need to have insurance coverage? And my answer, not to be sort of, coy, is it really depends upon the comfort level of the folks that are involved with the group. So typically what happens is there's a board of directors. It's typically a volunteer board of directors. Um, and and there will be bylaws, articles of incorporation. You might have tax exempt status, or you might not be there yet. So I would say, do people want to sit on a board if there is no coverage for directors and officers? Some people will say, I don't think we need to worry about insurance until we're actually serving, the population that we intend to serve. I think that the board should be made aware if there is coverage or if there's no coverage. And if there is no coverage, I think it should be recorded in the minutes of the meeting, just because you don't want to be the individual who everyone's looking to, if there's a claim, saying, what do you mean we don't have insurance? How come we don't have insurance? How much would it have cost? How come you didn't tell us? You'd rather be saying, folks, we're all in the same boat. Unfortunately, we decided to save a few bucks because we didn't think it was important to have that coverage at that point in time. But so I think it's good to engage the folks. And what directors and officers liability coverage does is really important to know. It's pretty much the management and supervisory liability coverage for an organization. You say what you're going to do in your bylaws, your articles, and you tell the IRS what you're going to do. If you have volunteers only, you still want directors and officers liability coverage and employment practices. The terminology in insurance can be confusing and can force people to make certain assumptions, and that's very dangerous. So somebody will say, we're just a volunteer organization. We don't need employment practices liability. And I say, I don't agree with you. While it does provide coverage for things like wrongful termination, discrimination, harassment involving staff, it also provides those same types of coverage for volunteers. So at a minimum, you've got a board of directors. You have somebody that wants to be on the board, wants to be the president of the board, wants to stay on the board, and none of those things happen. And that individual feels like you were being mean to me because I am, because of fill in the blank. It may be that you have a better candidate, and that person is not who you want to be the president of the board. It may be that that person is considered to be a liability because when he or she opens the mouth, it may be potentially creating trouble. So you've got coverage for employees, you've got coverage for volunteers. The third component with employment practices liability is for third parties. So that's the rest of the world. So there are people that might want the services that you're offering, but you can't accommodate all those people because you don't have the resources. Or somebody may have a reputation of being hostile, aggressive, etc., and you don't want to put your volunteers at risk by sending somebody into that person's home and have a one-on-one situation with somebody who you believe is a concern. So you may not be able to serve everybody that is interested in your services, and somebody may say, you're discriminating against me, you're being mean, you're not, serving me because of whatever reason. So a good broad directors and officers liability policy covers all of those types of folks. Who does it cover? It covers directors, officers, employees, staff, volunteers, committee members, etc. So people hear the who, and they generally get pretty excited, saying, well, this is terrific. This is covering all the people we care about. And then they get complacent and they think, good, we're done. That's all we need. Well, the what is the other important part of any liability policy. Not only the who, but what does it cover? And it's going to cover things like decisions with regard to management and supervisory liability decisions. So those are the types of things, but it doesn't cover auto, it doesn't cover work comp, it doesn't cover bodily injury, it doesn't cover abuse, it doesn't cover auto, etc. So you have to be very careful. It would be great if one policy would take care of everything you need, but it won't. And that's why I said we're going to talk about 5 or 10 different things. Directors and officers liability is typically the first coverage that is purchased by a nonprofit organization. Some will say, we don't have our tax exempt status yet, so I don't think we need the coverage. Well, I would say, again, it's really up to the board and the folks who may be personally liable if there is no coverage. So can we get coverage for a group that does not have tax exempt status? And typically the answer is yes. Most of our companies are willing to work with an organization that intends to be a nonprofit, but just has not gotten there because of the timing, because of the holdup with the IRS, et cetera. So directors and officers is usually the place to start. And the next one, Leslie, is general liability coverage. General liability coverage is premises liability. It's trip and fall. It's all that. People will say, we don't have a formal office. We don't have an address there. We don't rent. We don't pay rent. We have the opportunity to have a church, a public facility, a business allow us to use their space. So we don't need general liability coverage because they already have it. Well, exactly. They have it. So they have coverage for themselves. You don't have any coverage on their policy unless you are a named insured or an additional insured. So you should assume that all you have is what you've obtained on your own. So that, and what you want to make sure is that it's not site specific. You don't want designated premises, which will say it's at the address we have listed on the policy, which might be your home address. If the only coverage you have is at your home address, it's essentially worthless, unless you're going to have meetings in your home. So what you want is you want that coverage to go where you and your people go. It could be to this person's house. It could be to a meeting, could be to a grant-making organization, a funder. And this provides coverage for bodily injury to third parties. That means other people, no employees, no volunteers of the organization. It's the rest of the world. So bodily injury for them in case they get injured. It can be in somebody's home. You're trying to help somebody out of the chair. You're trying to help them to the car, and they fall. And all of a sudden, they want to indicate that you were responsible or partially responsible for that injury. So it's for that other person. If you go into somebody's office, somebody's home, you do damage to their property. You knock over their laptop, you knock over their flat screen TV or something, and they say, hey, I love you. I appreciate all you do for me, but you broke it and I want you to replace it. So there's coverage for that type of property damage also to other people's property. General liability coverage can be written as an annual policy or an event. For an organization that really hasn't started to do much work, that is going to have a fundraiser to try to kick off, generating some income, they may say, the venue is saying I need to provide a certificate of insurance showing that I have liability coverage. So they may say, can we get coverage just for this day, just for this weekend? And typically the answer is yes. For most types of events, you can do that. But if you're actually providing services on a regular basis, what you want is an annual policy, and you want a good annual policy that does provide coverage for certain types of events. And many of the nonprofit markets that we're using for organizations like villages, et cetera, are going to have some built-in coverage for events, but you want to look carefully at that and not make assumptions, because typically it will say, we don't provide coverage for things like rappelling down the wall, jumping into the water, bouncy houses, the kids jump in and they bang heads. So, or if it exceeds a certain number of people, 100, 300, 500, et cetera. So there can be good coverage built into a standard policy, but you just need to be careful so that you know what those coverages are. Okay, so that's general liability. So next slide. Professional liability. People think of professional liability with regard to doctors and lawyers and nurses, psychologists, CPAs, insurance people, et cetera. Those are pretty obvious. And people will often say, Well, I don't think we need coverage because we don't have any of those licensed professionals. And I would say, well, think about it. If you're providing information, if you're providing referrals to people, whether it's to a medical professional or it's for a caseworker, or if it's a suggestion, somebody maybe is developing dementia, and you've heard that the YMCA has these boxing, classes which seem to be very helpful for certain types of situations. So anytime you're making suggestions, if that doesn't go well and the person says, you sent me to somebody who's a bad person and that person did something that I don't even want to talk about, or they caused me to have some psychological trauma, etc. So even though you're trying to do a great job and provide assistance, that may come back to bite you because they are relying upon, the information you're providing, because you have experience more so than they do about dealing with this situation, and there's a reliance upon that. So we would like to see every village have, each of these coverages and more before we get there. So this is kind of phase one. I would say directors and officers, general liability and professional liability. Again, some people may say, I don't think I need the professional until we're actually direct service provider. Same with the general liability. But to start out, you probably are going to want to consider about 6 different types of coverage. So this is the first 3, of those 6. So the next one, hired and non-owned auto. People will say, we don't own any cars, so we don't need auto liability coverage. And I say, well, does anybody ever drive a vehicle to go to a meeting, to go see, a client, to go to talk to a funder? And the answer usually is, unless you're completely remote, yes, somebody's going to drive a car at some point in time. That individual is probably going to drive a personally owned vehicle. So that is a non-owned auto of the organization. If there is an accident, then the questions start coming. Where were you going? What were you doing? Were you driving on behalf of somebody else? I was going to see a client. I was going to a board meeting. I was going to talk to a funder. For who? For the Village Service Network, for so-and-so. Now, all of a sudden, the claim is coming against you personally while you were driving the vehicle and also the organization. What they teach you in Law 101 is basically you don't know who is going to be liable. You don't know who has insurance. You don't know who has money. So name everybody. So you name everybody you can think of because you don't want to have to refile, the suit and spend additional time and money. So you just name everybody and then let things fall as they may. Non-owned auto liability coverage is liability coverage for the organization. If you are an individual driving your own vehicle, the coverage that you have is what you pay for yourself on your personal auto policy. You can't say to the village, I was going out to see this person and I had a collision and it's going to cost me $8,000 to fix my car, so I'd like you to pay for that. There's no coverage for that. The village does not own that vehicle. There is no legal ownership. There's no ability to insure property that is not owned. So the individual needs to have that coverage. If that individual has $100,000 worth of liability coverage and the suit comes in for $500,000 against both parties, the organization with non-owned auto liability will have that excess coverage if they are found liable for that extra $400,000. So that's what it is for. The car owner needs his or her own coverage, both for liability and physical damage. And quite honestly, let's say that you're now driving somebody to a doctor's appointment or to the grocery store or to go out to lunch, and that individual is injured. What's probably going to happen is they are going to say, you were driving the car, it's your fault. You have liability coverage for this person, or you have medical payments or, PIP or no fault, depending upon the state. So the primary coverage is going to fall upon the driver, the owner of the vehicle. The non-owned auto is for the organization. If the organization actually went to Enterprise or Hertz or Avis or whatever and was able to rent a vehicle, that would be called a hired auto. Typically, unless you have a corporate account, none of those places are going to let you rent the vehicle in the name of the organization. They're going to say, no, you have to do it in your own name. So again, it falls back to the individual. And in that situation, you want to see what coverage you have on your own personal auto policy. But non-owned auto, we consider to be very important for anyone that ever is going to have somebody drive. Okay, next slide. Volunteer accident. You've got folks, whether it's your board members or other people that are serving the public, and if that person is injured while making a trip, while helping somebody else, the only coverage that's available is through something like volunteer accident. Some people will think, we've got that general liability that you talked about earlier. We got that for bodily injury. And remember what I said is for third parties, other people, not employees and not volunteers. So some people will think, well, that doesn't seem fair because it should cover our volunteers. Well, in a perfect world, sure. But the reason it doesn't is because the volunteers are covered from a liability standpoint, just as your employees would be. So here's a simple example I think that will make sense. If you are a homeowner and you have homeowners insurance coverage and you fall down the steps because there's ice out there and you get hurt, you can't sue yourself and recover against your liability coverage because you are the insured. You have coverage if the neighbor or the mailman slips and falls on your property because maybe there's ice. So you have that liability coverage to protect you, but you can't bring suit against yourself. You can't have both. You are an insured or you are a covered party. So as an insured under the liability coverage as a volunteer, you have the protection that's afforded to the employees, et cetera. So you have that coverage, but you can't make the claim. So volunteer accident coverage is a very important coverage. And I think one that every organization would like to be able to say, we care about you guys. You're important to us. The work you're doing is invaluable. And we are providing the coverage that we can obtain. And by the way, it typically starts at $300. So it's not really an expensive coverage, but you can often get $100,000 worth of coverage for a few $100. And it's good coverage to have. And it's the only way to get that coverage. Okay, next slide. Abuse and molestation. We think this is very important. In many situations, you're going to have a one-on-one situation. So there are no witnesses around. Allegations can be made. Somebody can be trying to help another individual, and they can say that you touched me inappropriately. Or you can have people that may be aging. They may have some difficulty with their faculties. There may be misunderstandings. There may be a history of mistreatment, and any of these can lead to the potential for an allegation that somebody says, you did something that was inappropriate. An example could be that you were trying to help the person physically, get out of a chair, walk to the car. I do this all the time with my mother-in-law. I did it with my mother, when I had the opportunity. And so you could be trying to do that. The person can slip, and all of a sudden, there's contact made in a place that is not considered welcome. So we consider abuse and molestation to be essential. So these 6 coverages that we've just talked about thus far, some people will say, well, this guy's killing us, with insurance coverage and all the premium. You can get this coverage oftentimes for as low as $735 for the 5 other parts, and then directors and officers liability might be another $700. So call it $1,500, and most of these coverages are going to be $1 million limit of coverage, except for the volunteer accident might be $100, and you might be at $1,500. So does it cost money? Absolutely. What does it cost if you have no insurance? How much time are you going to get from an attorney for $1,500, and you've got no coverage whatsoever if you have to settle. So insurance provides defense and settlement. So it's often a good value. People will decide when and how much, but the starting point you should think about is probably in the range of $1,500. And what people do, and the risk that I run in saying that is you get a quote and it's now $2,000 or $3,000, and they say, "Well, wait a minute, you said it was going to be about 1,500." And I'll say, "I think what I said was the minimum will be about that, but it can change based upon the individual circumstances." And people will say, "Well, I talked to a friend of mine and they're paying less than we are." And I say, "Well, yeah, they're probably paying less for you on their homeowners, or they're paying more. Same thing with their car insurance. You really need to look at the coverage that's being offered. And is this an exact science, or is this more of an art?" Well, guess what? I talked to a guy. He's a nonprofit. He called me. He said, "Can you review my policies?" He sent me all his stuff. He was paying about $8,000. He's paying a little over $3,000 as of last week with us. We didn't rip away coverage. He was just being charged ridiculous amounts of money. I don't know how that broker could sleep, doing what was being done. I don't think it was any ill intention, but it's crazy because when we deal with exposures like nonprofits, like villages, the first time I was asked to go talk to a group in, I think it was Montgomery County, a group of villages, I said, "I'm not prepared to do that." And they just were silent. And they said, "What do you mean? We have like 12 people that want to talk about it." And I said, "I'm not going to come down and talk about the problems that these people have until I'm prepared to talk about a solution to those problems." So I went to work and I started to talk to companies, and I tried to find the right markets, the right companies to partner with, so that when we identified a problem, we would have a pretty good chance of providing a solution to that problem. And that strategy has worked fairly well, and it still does. And people will say, "Well, are you going to shop our coverage next year and every other year?" And I generally say, if necessary, but if you do it right, and then you have an open dialogue with the client, among the broker and the client as things change. I mean, some of you have already experienced this. We've grown tremendously since we started, or in the last year. Well, that's important information, and your broker should be made aware of that, just like your accountant or your attorney should. As things change, as you evolve, you call and say, "Hey, this is changing. We're doing this now. We've expanded our scope of services. We've expanded our geographic footprint. Do we need to do anything? Or we're going to have this event. We're going to have 500 people there. Do we need to do anything specific? Or, hey, we decided that at this event, we're going to offer beer and wine. Well, do you need to get a permit? Do you need to get a license, a temporary license? Do you need liquor liability?" So err on the side of saying, "Hey, I just wanted to mention that we're doing something that's a little bit different than we've ever told you before. Are we good? Or do we need to do anything different?" That's the kind of dialogue that should occur, with your broker. And people will say, "I heard this company's great. I love this company because this is a nonprofit organization." And there are a couple of those. We work with companies like that. The bottom line is, what you want is you want the right information, the right coverage at the best price. Does it really matter what the name of the company is? Does it really matter if it's an admitted company or an excess and surplus lines market? It can be different, but it doesn't necessarily mean that one is wrong. It just means that one may be the right choice based upon the timing and those specific circumstances. So while we would like it to be really simple and easy, it's a little bit different than that perfect world. So you just want to make sure that you're making good decisions for you and your organization, and that you're relying upon somebody to help you do that. And if that person wants you to rely upon what he or she says only, then that may be concerning. So Do I think I know what I'm talking about? Sure. If somebody says, well, you told me this is going to cover third parties on the directors and officers liability. Can you show me where that is? I say, I'm happy to do that. I have no objection to trying to convince you that the coverage that I tell you is there because I'm not making it up. I've got too much invested in in these opportunities that I've helped to create with different organizations at the state level, at the national level, and groups like VSN. So if
Hey,
somebody
Rob.
says,
Sorry, Rob, let me interject real quick. You talked about when a village is undergoing changes. It's really important to have these dialogues. One change not many of our villages have gone through necessarily yet is when they hire staff.
okay,
So there's a couple other policies I think you want to talk about
yes,
when that
absolutely.
happens.
Yes.
Let's cover those and then we'll be able to field questions too.
Okay, great. So, yes, great point. So, as you hire your first employee, that should trigger some things. You know, in most states, you should have workers' compensation coverage. In many states, it's required. So, this is typically coverage for a W-2 employee, and it's going to be for a compensable injury in the course of employment, typically by a W-2 employee. So, I've said that more than once. The point I'm making here is if you have a W-2 employee, and then we have situations where people have independent contractors, they're 1099. Are they covered? Well, if they are not insured on their own, they can potentially file a claim against your workers' compensation. And whether you like that or not, or whether you think it's fair or not, probably doesn't matter. If that individual is deemed to be considered a W-2 employee, regardless of what you called him or her or wanted that person to be, you may now be subject to coverage that you might not have had to date because you didn't have an employee. You might be subject to withholding for federal, state, Social Security, et cetera. There may be a whole can of worms there. So the issue about is this person a W-2 employee or an independent contractor? You can Google the tests for those types of things, but just be careful that independent contractors are very, very interesting in terms of exposure because one, are they going to be entitled to make a claim against that type of thing? Two, do you really want them to be covered under your liability policy as a volunteer? And three, can they actually be covered if they are considered an independent contractor? So be very careful with all of those things. It's not as black and white as you might think. So there may be coverage requirements. You know, people will go through an audit at the end of the policy year or after the policy year, and they will report their payroll amounts to the workers' compensation carrier. And then there will be these questions about other people that you paid. And all of a sudden, they paid $10,000, $50,000 to other organizations. And if it's a CPA firm, that's fine. If it's somebody that's helping you with cybersecurity, that's probably fine too, if they are doing that for other clients. But if they are just doing it for you, that the amount that you've paid them may be construed as payroll and be subject to premium for things like workers' compensation and general liability. So the simple thing is, if you do have an employee, you probably are obligated to have workers' compensation. And even if you're not, do you want to self-insure in case there's a claim, or do you want to transfer that liability by saying we're going to buy a workers' compensation policy? That way we have defense and settlement if there's an allegation, if there's a claim. And you might feel like, well, sure, we want to do that, or we at least want to explore that and then make an educated decision if we have the opportunity to buy that or not buy that. And workers' compensation, what it typically does is it covers the injury. If they have to go to the emergency room or go to patient first or urgent care facility, it's going to provide coverage for those types of things. If they need rehabilitation because they're disabled or whatever, if they're not able to work and earn an income, it'll pay a portion of what they earned previously for loss of wages. And then sometimes there's a permanent disability. You can have a temporary or a permanent disability, and it can be total or it can be partial. So there are different degrees of those, and the benefits are typically managed by a group like the Workers' Compensation Commission. So whether you're with Hartford or Travelers or State Farm or whoever, Philadelphia, the benefits are probably going to be mandated by the jurisdiction in which you are residing and the benefits that are provided, under those organizations. So workers' compensation, I think, is fairly straightforward until you get outside of a W-2, and we've kind of talked about that. Employee dishonesty. So occasionally there is a requirement that you have coverage for employee dishonesty because a funder is requiring it. So this can be called crime, employee dishonesty, et cetera. A bond, it can be a fidelity bond. So all of these things refer to the same type of coverage. It's coverage for embezzlement, misappropriation of funds. It can be stealing inventory too. It doesn't have to be just cash. And what's really important under an employee dishonesty policy is we're nonprofits, so we've got volunteers. We want a volunteer to be included either in the definition of employee or specifically identified as covered. So, if you're a volunteer organization or if you do have employees and volunteers, somebody can take money whether they're an employee or a volunteer. So in every nonprofit organization, you want to make sure that this crime policy, this employee dishonesty, is going to cover the exposures that exist. Maybe you've got an independent contractor who helps you pay your bills. Is that person covered? Probably not. Do you want that person covered? Probably. So can that individual get coverage on her own, on his own? Maybe it's a CPA who is moonlighting. They do work for 5 or 10 different nonprofit organizations. That's not that uncommon. Does that person have all the coverage he or she should? Maybe, maybe not. Can you get your policy endorsed specifically to cover that individual who's an independent contractor? Some forms, the answer is yes. They typically will want to know who it is, why you're asking for the coverage, what they do, and that sort of thing. And the other thing that's really important about employee dishonesty is probably in every policy buried that no normal person has ever seen. I've seen it, yes, you can chuckle, is something that basically says we don't provide coverage for anybody who has been previously convicted of that type of a violation. So if somebody stole 20 years ago from the rec council, the PTA, whatever, any organization, there's no coverage for that individual. It doesn't matter if you knew that or not. The insurance company's not going to cover it. So do you want to ask the question? Well, there are some questions that can be awkward to ask. This can be one of them. Do you want to ask your volunteers if they've ever been accused of inappropriate physical contact, with an adult, with a child, et cetera? There can be some uncomfortable things. But from a risk management standpoint, one of the things that I like to say is talk to your group of folks, your committees, your board of directors. People think risk management is really high up. It's in the clouds, and I don't understand it. I never studied that in school. Well, let me try to make it simple. I do this for myself so I don't get too confused. What could happen that could make it a really bad day for you? The car accident, the allegation, or whatever. Take 5 minutes, take 10 minutes, think about what could happen that could make it a really bad day, and then take a look. Do we have coverage for that? Should we have coverage for that? Is it available? Is it affordable? Let's say the answer is no, it's not available, it's not affordable. We can't justify paying for it. Then maybe what you do is you institute some policies or procedures within the organization that you adhere to, because you're now doing risk management. Insurance is one way to transfer risk. Another one is risk management. So we are going to try to reduce the likelihood of trouble by doing these types of things, sharing these types of things, telling people they can't do these types of things. So, insurance is one component to the risk management process. So, yeah, we've identified a bunch of policies. They are going to become important at different phases in the evolution. And but
Hey, there's one more to tackle. Talk about really not understanding something, and then we'll jump to cost considerations.
okay,
The last one here, let's see, where were we on
cyber
my
liability.
deck? Yes.
So I like cyber liability. It's one of the more recent policy types. Um, People will say we don't need it because we're not really sophisticated. We don't have all this kind of personal health information or personally identifiable information. We don't have all this. We don't do this. We use a service and we host on the web. We use these different pay processing, services, etc. And I say, are you trying to convince me that you have no cyber liability exposure? Because you're never going to. The number one problem that results in a breach is human error. If you use email, you potentially are susceptible to being tricked. Somebody sends you an email, you think it's legitimate, you think it's safe. You look at it on this little thing. I'm not wearing my readers. I can't even see. I thought it came from my partner, whose name is David, but his name was spelled not David. It was Dav small ld. I didn't notice it. I clicked on it. It looked legit. Now all of a sudden, our system's been locked down, and they want ransom. They want us to pay to release the key. So human error is there. There's an attachment, and you think it's legitimate because it did come from what looked like the email address of the executive director or the president of the board. All of a sudden, you're in trouble. You didn't know, you didn't call to confirm, you got tricked. And this level of sophistication is far higher than it used to be. AI is part of the problem and part of the set of tools that these bad actors are using to try to make it sound. They'll mirror your style of emails. They'll mirror your style of communication to make it look legitimate. It's not as simple as this is coming from some foreign country, and it's so obvious that it's not coming from, my friend, my boss, my partner, etc. So cyber liability, it does two primary things. People think that it just provides money to pay off the ransom or to pay a claim. Well, what it does that's also very important is you've now realized that you got tricked. It's a breach. Who do you call? People generally don't have any idea. I don't even know where to start. So you call your broker and you say, hey, I know you sold me that cyber liability. I think we have a claim. Who do I call? Well, I give you the 800 number. I send you the information. They assign a breach coach. So the breach coach is going to tell you what to do. Okay, you operate in these states. Well, in every jurisdiction, there are different requirements for notification to everyone who may potentially be impacted by that breach. So how would you know where to start? If I operate in 10 or 20 or 50 states, how would I even begin to know the notification requirements in each of the different states? So they will do what is necessary and they'll pay for it. And if there's no coverage, they probably will also have contracted providers who provide their services at discounted rates. So you get a breach coach that's going to tell you what you need to do, and they're going to put you in charge of the folks that are going to do the forensics analysis to try to understand how these people breach your system. So, for example, it may be that there's cyber crime. So cyber crime may mean that they actually got into your banking system and they were able to transfer funds to another party who has nothing to do with you. So they may have breached your system unbeknownst to you and done that themselves. So funds transfer fraud is a cyber crime coverage that is done outside of the organization. You had nothing to do with it. And I'll tell you, I had a client that was a fee for service, and they were getting a lot of money from the city of Baltimore. And they called after a few weeks of not getting money and said, "Hey, you guys are like $300,000 behind in what you're paying us, and we really need the money to pay our rent and our bills." And the individual said, "What do you mean? We've been paying you. Yeah, you switched your bank to a bank out in Pittsburgh, and we've been paying you every week. We never switched our account to a bank in Pittsburgh." "Well, yeah, you did. You sent me an email." "No, we never did." "You didn't call me before sending six figures to a new bank out in Pittsburgh?" So the organization did nothing. They did nothing wrong. And now they're trying to recover. Um, that's unfortunate. They actually had insurance coverage, and the policy, although I didn't think it should have, it paid them over $75,000 to help them, get over that hump. But there are different components of coverage, whether you do anything wrong or not. So the funds transfer is when it happens completely outside the organization. The one that's inside the organization is often called social engineering. And that's yeah, we got tricked. We believed it. We thought it looked legit. I listened to the instructions and I did what I was told to do because I thought it was coming from my boss, the president of the board, the executive director, et cetera. And I got I got tricked. So there's coverage for social engineering if you have the right type of coverage under the cyber crime components. So there's coverage for money, there's coverage for support. It's really important. People will say, "I don't think I need it." I just wrote a policy for $425 the other day. It's low limits. It's the cheapest cyber liability policy I've ever written, but the guy has way more coverage than he had last week. So he's comfortable. And I said, "You just be conscious of the limits, but you got way more coverage than you did before. And not only is it the premium, it's also the help." So a lot of what the insurance does for you is not only provides coverage for settlement, but it provides coverage for help, whether it's defense or just assistance.
So, so we can get to questions soon because maybe there's burning questions in addition to some that were sent in. These are the 9 kind of basic policies that he has stepped through. I'm going to let him Rob speak a little bit to the cost factors, the overarching important considerations. We'll talk to the VSN policy and then we'll open it up for questions. But cost is probably on everyone's mind.
Yeah. So as I said, you're not going to get away with $500 for all the coverage you need. So if you're not thinking about at least $1,500 to start, you probably should be. So every group is different. Like I said, you can be an all volunteer organization and you're serving nobody or next to nobody at the moment. You can have 10 or 100 employees. You can have 10 or 1,000 volunteers. You can have multiple locations, et cetera. So the premiums are going to be all over the place. So what's it going to come down to? Well, one, geographic area. So if you're in Washington State versus Florida, you're in North Carolina, whatever, the jurisdictions just have different rates. So the geographic location can vary, by state. It can vary within a state, but not as much. The number of folks, how many people do you serve? How often are they served? How many people are serving them? So you've got people on your end that you're pushing out, you're offering out to serve those who are recipients of the services. So they're going to want to know how many are on your side, how many are on the receiving side, and how many times are you serving them. In the volunteer accident coverage, there are 2 components of volunteers. I call them full-time and part-time. So a full-time volunteer under that policy is defined as working at least 50 times a year. Part-time is under 50 times a year. And what they do is, if you're under 50 times a year, we want to know how many times. Is it 20 times a year? And, so they're trying to get the number of visits, trips, the number of touches versus just the number of people providing those touches. So it's an attempt to aggregate the total exposure of all of those. Next one is drivers. How many people do you have out on the road? Obviously, most of the time they're driving their own vehicles, but do they have insurance? Do you require them to have insurance coverage, which you should? And, do you ask them to provide proof? even if you don't collect the information, do you say you are not allowed to drive on behalf of the organization unless you are abiding by all the mandatory liability laws, in our state, et cetera. So even if you don't say we're going to collect that and we're going to act like we've given you the good housekeeping seal of approval, we're going to say you're not allowed to do it unless you are doing the right thing. So a lot of what we talk about is really complicated, is doing the right thing. So uh, types of services,
Oh, sorry, jumped the gun.
nope, types of services. Don't assume that I or your broker or the insurance company know what's going on. So what I used to do for my mom was I'd pick up groceries, I'd take her to the doctor, I'd take her to lunch, I'd help her get into the car. I took the car away from her because she was no longer, in my opinion and all of my siblings' opinion, responsible enough to get behind the wheel. And we actually convinced her that it made sense. So I wasn't providing medical services. She lived in a place that we paid rent. So I was not doing landscaping services. I was not doing construction services. I was not putting in handrails in showers and bathrooms, et cetera. So I wasn't doing construction work. So the types of services offered will vary. And it's very important to make sure that the company is aware, because the last thing you want is to have a claim and you're saying, well, we didn't lie about what we do. And the insurance company says, but you didn't tell us. So we didn't know. We didn't have the opportunity to say, yes, we're comfortable providing coverage for those types of services, or yes, we're comfortable providing coverage for those types of services at an additional charge, or it's not covered. So you really want to know that before something happens. So, do the right thing. Tell them what you're doing. As you evolve, as you grow, make sure that if things change, you're telling somebody about that, because when you fill out an application, what you put on that paper becomes a part of the policy. So if you said, we're just providing companionship, we're just checking in with people by phone once a week, and there's a claim that is significantly different from that, they can say, you didn't tell us. Things changed. That's a material misrepresentation or change in exposure that we were not informed about, therefore no coverage. And that's perfectly legitimate because they didn't know about it. So be very careful.
So these are our kind of concluding slides here. We've walked through 9 different policies, and each village at a different stage is going to need different aspects of them. So one of the main points is don't make assumptions, consult a trusted expert, someone like Rob, and be very clear where you are at any given time and as things change. So I'm going to open it up to questions. One comment before I do. VSN, the Village Support Network, does supply insurance reimbursement. It's aimed at newer villages, emerging villages, and it gives you some cost relief in the very early stages of forming your village. Those of you that are up and running, we don't typically target a village like that. We'll pay up to, these are up to amounts, and it's always a function of how many funds that we have available, and if there's any grant restrictions, of course, we have to abide by them. But in the first year, we'll pay up to 75% of your policy, and then it steps down 50% in year 2, 25% in year 3. So we welcome you to stay in touch with us, with the VSN board, with your liaison in particular, about your insurance needs, your requirements, where you are in the trajectory of your village, and we hope that we can support you. I know the consortium, the Montgomery County Village Consortium, also has a fiscal sponsorship and can potentially help defray some of those costs or provide the insurance umbrella policy that you might need. So I would recommend that you reach out to the consortium if you're considering joining them. They are a membership organization, so there are membership restrictions as well, or conditions that you have to meet. But both of us offer different levels of support. But let me stop there. We had a couple questions sent in, but now is your opportunity. Feel free to unmute, pop on and ask a question, or drop something in the chat, and we will be checking on it and giving you a voice if you have a particular question.
So Leslie, if I can just jump right back in,
Yeah.
since we're talking about cost, um, I think what's important for people to understand is that an insurance broker like me typically is getting commission on any products that are sold. So if you are buying coverage with me through Philadelphia, through the Alliance for Nonprofits, through Great American, et cetera, those companies pay me. You don't. So you're not going to get a bill from me saying you owe me $100 because you called me and I spent 30 minutes on the phone. You're not going to get a bill typically from me that says for your liability policy for your directors and officers, you owe me X dollars, because if I am receiving commission, I can't bill you legally. So if you're now, having said that, you could potentially get a bill from Gorges and Company if it is an agency bill policy versus a company bill policy, but you're not paying it twice. You're paying the premium and you're not paying any fees or commissions or anything like that. So most brokers are never going to bill you for their services. And if you want to hire a broker who you don't intend to allow you to allow him to or her to write your insurance coverage to gain that commission, then it may be reasonable to say, can we hire you as a consultant and we'll pay you, whatever's reasonable. But that's the exception.
Okay, thank you. Questions?
Hey, Rob,
Yes.
is it after your presentation, which was great on the 9 areas, in essence, is it appropriate to take a recording or the slides of this presentation to our current broker and say, are you absolutely positively sure we have all these things?
You can do that.
All right.
You can probably take the one slide, that shows the 9 component parts and just say, can you tell me what I have and show me?
Rob, I'm also was planning on sending out that piece of collateral that you have that lists the 9 policies, actually a little bit more than that, I think.
Right.
So that will be theoretically coming in the follow-up email, Owen. And yes, this presentation will be available. We're going to send out the slides PDF as well as the recording and that piece of collateral that I just mentioned.
Great.
Okay. There is another question in the chat. Independent contractors who sign agreement acknowledging status as such and not subject to benefits from the organization. Usually proof of the contractor insurance is requested, but in that scenario, is workers' comp also necessary?
Typically what happens is in an audit for workers' compensation following the policy year, think of an audit as you're filing your taxes now. It's for April 15th. Everything you've done until April is designed to try to keep you current, with regard to what you're going to owe. So when you settle up, you either have to pay because you didn't pay enough or you get a refund because you overpaid. So an audit is intended to do the same type of thing. It's to try to identify the exposure that existed, both in terms of the scope of services being provided, so the classification, and the payrolls. Payrolls is misleading because people will think the payroll only includes what went through my payroll company to my W-2 employees. Well, if you look at any an audit, and one of the companies has something called Audit Made Easy. I use that because they're the largest writer of workers' compensation in our state, and they actually happen to be nonprofit now, which is pretty cool. So they're the only company I know of that is a nonprofit work comp writer in our state. But it will say specifically in there that what can be included in payroll is amounts paid to uninsured contractors. So if you have a contractor that has workers' compensation coverage, you get a certificate of insurance from that individual, and that amount that you're paying that individual cannot be considered payroll. That person has their own coverage and has provided proof through a certificate. You don't have that, they can pull all that amount into your payroll, whether you like it or not, because that person can file a claim. So payroll includes things, and that's why I sort of spoke about the independent contractor earlier, because independent contractors open up a whole can of worms, both in terms of ability to make claims against coverage and also being protected by that coverage as a volunteer or an employee is. So if there's one takeaway to this, it should be what you do for your own organization should be strictly based upon your own organization. We can give you a big overview, tell you what types of things to look for, but your broker should be trying to make sure that based on what he or she knows, you're being offered the coverage that you should be considering. You might decide not to carry it, but a good broker should try to make sure that you're aware of what you should be considering.
Okay, great. A couple other interesting questions. One of them comes about fingerprinting. Is fingerprinting now a thing with volunteers? It's been asked. Do insurance policies, are they requiring it, requesting it, suggesting it? And then something else about insurance applications of old. How can we get the data that was underlying that? But talk to fingerprinting first, and then I'll come back to you on the other one.
Well, it's going to vary. I mean, some insurance companies are going to say things like, do you allow people who have a previous conviction of an abuse allegation to work or volunteer on behalf of the organization? Well, how do you know? Are you doing background checks? You know, I would assume that if you're doing background checks, you're paying some organization for that. Hopefully it's discounted, but to flush out, you know, those types of circumstances. You know, I wouldn't know where to start. I don't want to be the person who's in an interview situation and saying, have you ever stolen money from an organization? Have you ever been convicted of child molesting or whatever? It's awkward. And how is that person going to respond to that type of a question? That person may say, well, I think you're being awful. I think you're making assumptions. I don't like what you're insinuating. So, you know, some of these background checks, I think, are a way to work around potentially putting your foot in your mouth, you know, by doing some of these types of things.
Okay, thank you. One of the questions that was sent in, by the way, I want to give justice to it, is from our Leisure World folks. They, if I can find it now, it's in here. They're a sanctioned club within the Leisure World Corporation. Are they covered under that organization's umbrella, general liability and other insurance?
Okay, I don't like the word umbrella at all. I think it gives people a greater sense of comfort than it should. First of all, umbrellas are the exception versus the rule. The rule is an excess liability policy. So think of excess like I've got my $1 million worth of liability and I've got my umbrella, which is really an excess. That provides the next level of protection. Does it really drop down to the ground and become a primary policy? Typically, the answer is no. So you need to have your primary coverage, whether it's general liability, auto, directors and officers, et cetera. You may have an excess liability policy that goes on top of that, and be very careful. A group, actually, it was a village that I was talking to yesterday afternoon. They're in Washington State. And I said, okay, they're quoting you an umbrella. Let's just call it that. It's really an excess liability policy. The only thing it goes over is your general liability. And they're like, well, what does yours go over? I said, general liability, directors and officers liability, and the auto. And they're like, oh, wow, that's great, because we've just given our directors and officers an extra $1 million worth of coverage. I said, yes, if you buy my policy. So, you know, an excess liability policy can be helpful. So that's amount of coverage. Now, is there any coverage? We're a sanctioned group. We're a program. We are whatever. Are we covered by the general liability policy? Well, what does the policy say? Who does it cover? It covers the named insured. Who's that? ABC Village. That's who's covered. Employees, volunteers. Well, we are doing something. Well, are you part of ABC Village or not? If you're not, I don't know where your coverage is.
So can I just clarify, as Sheila is doing the same thing in chat? So her question, which I think you answered, is Leisure World has their general liability coverage. Are you suggesting maybe she needs to get a copy of that, read it very vigorously to see if it names things like sanctioned clubs are covered?
Sorry. Yeah, you're going to have to go to the definition of an insured. Who is an insured? So it's going to say typically the named insured is Leisure World or whatever's listed on that policy. So are you part of Leisure World? So
yeah, so there's a definition issue that she has to research.
Yeah, you brought up fiscal sponsor. That's another scenario. You need to be very careful with all of these relationships because is it part of the legal entity that is a named insured who is covered? Is it not? So what does a policy say? So it will say things like we cover the named insured. Well, that's great. And then it will say individual insured. So reading these policies is no fun. It's punishment. If you're forced to read these policies, you've been bad. So this is your punishment. And then try to follow it and try to figure out what it actually says. So under insured, you're going to see named insured, and then there'll be additional insureds, and then what's an individual insured. So you may have to look at different sections and to get to the bottom line, if it gets you where you think you're comfortable now. But quite frankly, if you got a broker, make the broker do the work. Say, this is my situation. Am I covered under the policy?
Oh, that's good. Send it off to them.
Because and show me in writing.
Sorry. Foolishly, I asked Kathy to send me the VSN policies last night. Little did I know one was 77 pages. The next one was 83. Yeah. I'm like, okay. I printed out a total of 6 pages, the policy, the declarations page, and the premium page. But let me go back to one of these other questions. How do we know what was put in the original insurance application if it was purchased years ago and the people that submitted it are no longer around to talk to?
Does the company have it on file?
The application itself.
Correct.
Okay, so see if you can get that, and then, but otherwise look through your policy, I imagine, and understand if you need to refresh anything.
Yeah, or do a new application.
Okay.
Can I ask a really dumb question?
No questions are dumb. Go for it.
Why is this not centralized under VSN and made compulsory or is that a ridiculous idea?
Well, I think the idea is not ridiculous, but you have to understand Village Support Network right now operates through grants and private donations in Montgomery County, Maryland.
Okay.
So we are not the Village to Village Network. It just so happens that BT and I are both on the board of Village to Village Network, which is the national kind of umbrella. There's that word again that maybe it's not good to use.
Association.
And it's a very good concept. VSN, we are hosting this for our villages that we support locally, but because we publicize it through WAVE and Village to Village Network, we're able to pick up people around just for educational purposes from across the country.
Okay, I think I understand that, but I'm just mentioning for the possibility of future that Villages handles it, Rob handles it, and then we just all come in and buy the packages we need.
Yeah.
Otherwise you're trying to duplicate Rob's work with your own.
Fair enough. And these workshops are given kind of routinely by the different organizations. I think VitaVN had Rob actually do one not too long ago, a year and a half or so ago. But that does beg the question. Anna from Mill Creek here in Maryland did ask, do we have any statistical information on how many claims are typically made by villages against those various policies or coverages? I don't know, Rob, if you've been working with villages for a while, have you been amassing any data that you have at the
Well,
top of your head, or something we could, put together and start to think about to really understand the impact of these policies?
I definitely do not have any of that data. Claims come to me sometimes, and the minute it comes to me, I tell them who to call because it's going to be the claims department at the insurance company. It's going to be a toll-free number. So, um, are they compiling data specifically related to villages? I doubt it.
Yeah.
Um,
Okay.
would they, with regard to nonprofit organizations, possibly. So let me try to address an issue that I think Owen sort of was kicking off. And I do benefits too, which we didn't really talk about, but if you have employees, you might need to consider benefits. But one of the questions that always came up for years and years and years was, we're a bunch of small organizations. Can't we come together as an association and get a master policy that we can all join in? And won't we get a better deal because everybody knows that bigger is better? Good luck. First of all, do you guys all want to be on the same policy, potentially sharing in the costs when certain villages are having claims and you are not? How are you going to try to allocate the expenses? Even if somebody would write a master policy, does it make sense? You're going to have varying degrees of exposure, different cost structures, different levels of support. So, one, if it were available, would that be our preference? And two, is it available? And I think probably not.
Okay, and a simple one, I think. Are requirements different by state? I'm assuming yes.
They can be.
Okay. Now, another one, longer. If you are a nonprofit village that charges no fees or dues with no money except for donations, have no facility, so no on-site premises to meet in except for county facilities, and offer no services except being a source for resources or referrals, and I assume maybe some social events, maybe not, that's not in here, but why is it necessary to have as much insurance as you covered? And maybe it's not. So what
Sure.
would be the starting point for them?
Yeah, I mean, some of the ones that were later in the presentation and in the hierarchy are not, because yeah, you don't need workers' compensation coverage. So, do you need directors and officers liability? Well, ask the people that are directors. Are they comfortable not having insurance coverage? So, is there a requirement? Oftentimes, there is not a requirement. If you said that you're only using somebody else's space, well, I talked about that, saying, well, they have coverage. You don't, unless you are an insured under that policy. So if somebody comes to meet with you and they get hurt, who are they going to blame? Who are they going to sue? Well, the attorney doesn't care or know who has any money. So a smart attorney is going to name everybody who may be potentially involved. Guess what? If somebody slipped on the floor and I look at the floor and I say, I think that there was like the wrong kind of wax put down, I'm suing the janitorial company too. The building owner, the tenant, you guys, because you had this event there, the janitorial company, whoever I can think of, the property manager, I don't know who's got coverage. So how are you going to get your defense and potentially settlement? If you don't have insurance coverage, you're on your own. You have just decided to self-insure. So you can reduce the liability by trying to be smart, but can you eliminate it? And my opinion is no. You can reduce it, but not eliminate it. And some groups go with no coverage. That's perfectly fine. They should just be comfortable with that.
So this kind of goes to our definition questions before and piggybacks a little bit on that last question. Please describe the difference between additional insured and additional named insured. There is some confusion among the rank and file and leads to a misunderstanding of the level of coverage for
Yeah, it doesn't make a big difference. The named insured is usually the person on the declaration page, the first page of the policy or the third page, whatever. So, and typically there's not enough room there, to put additional insureds. So It typically is just done as a matter of practicality differently. But if you're an additional insured, what that means, let me give you an example. I think this is a good one. We rent this space in the office. The landlord requires us to provide proof of insurance coverage and name the landlord as an additional insured. So what that does is if you come into my office and you get hurt and you bring the suit against Gorges and Company and the building owner, then that building owner is an additional insured on my policy. My policy will respond on behalf of both Gorges and the building owner, and my policy is primary. So it is going to provide coverage for the building owner when I am named. So it's an additional insured. If somebody falls not coming to Gorges, but is coming in the front door and is going to the floor above me or the floor below me, has nothing to do with me, that building owner may get sued, but my policy is not going to respond because I'm not named in that suit because it had nothing to do with me or Gorges. So the building owner may have coverage on his own for what he is not an additional insured on somebody else's policy. So additional insured just brings you into coverage that other party already has insurance coverage for.
Okay. Any other questions? Feel free. Now is your time to pop them into chat. I'm looking at some of the questions that were sent in. Would you discourage a small village from relying on federal and Maryland limited liability protections for a 501c3 volunteers?
Absolutely. Do not count on that. There's a federal law called the Volunteer Protection Act. I think it's of 1997. If you read that, what you're going to see is it provides no charitable immunity for the organization. None. It's worthless. There may be some coverage for an individual volunteer. However, it's limited. There are, I think, 3 sections that are clearly excluded, and that's the Volunteer Protection Act. So no coverage for the organization. Since we're talking about Maryland, and that's one that I'm very familiar with, I will tell you that the Maryland statute essentially says there is no protection under the Maryland charitable immunity law unless you have insurance, the right type, the right terms in terms of limits and deductibles. So you have no protection unless you have insurance, and it has to meet the criteria. So as far as I'm concerned, any reliance upon the immunity laws is probably foolish.
Okay, that goes to one of the other, I think you're talking about, are there any specific coverage requirements if a village hosts exercise classes with independently insured fitness instructors? They have their insurance, but.
So if there is an individual who is licensed, let's say, or trained or whatever's gotten the yoga certification or personal training or whatever, and carries professional liability, that's terrific. I would want to see a certificate of insurance from the individual showing the company and the limit of coverage. And I'd also want to be an additional insured on their policy. Because guess what? Somebody gets hurt. Who are we going to sue? Everybody, including the organization. So you would like to be an additional insured on somebody's policy who needs the coverage, who has the coverage, and is paying for the coverage. You are not changing the exposure that individual is bringing to that session. They already are doing it. So it's already there. You're just trying to piggyback on their insurance coverage.
Is it, this is my own personal question. Is it hard to become an additional insured to make that kind of request? Because one of the other questions was, and you've definitely touched on this, why is a village required to have insurance to meet in a community or rec center that should already be fully insured? We kind of covered that, but if you go to the rec center or the instructor and say, I want to be on your policy, is that what you're suggesting? Add me to your policy temporarily, or?
Well, if you're an organization and you are offering services, like let's say yoga or stretching or whatever, maybe it's the the stuff that seniors would do, and a lot of it's done in their chair. But you bring in somebody who's been trained, that has understands ergonomics and these types of things. If you are offering that service, and the person is qualified, why would there be any hesitation to say, hey, my broker said I should ask you for proof that you've got insurance coverage? You can blame it on your broker. Say, hey, they told me I should ask you for a certificate, and you should be able to get the company to name me as additional insured because we're hiring you to provide these services to our people.
Okay, so it can happen reasonably seamlessly.
It can.
It can. All right, Kathy.
It should make sense.
Yeah, okay. Kathy has her hand up. Go, Kathy.
What's the best process when we have events to make sure our event vendors, such as a hot dog vendor or balloon vendor, something like that, has their own coverage? I mean, we should definitely receive the certificate, correct?
Correct.
Or do we then notify our insurance company that they don't have insurance, so they would have to be covered under us?
Well, that's not necessarily going to happen. So if you're not in the business of making and selling hot dogs, your policy is probably not going to provide coverage for that. You know, if there is somebody gets food poisoning, that's a product liability issue. You know, let's say you're a village. Did you ever contemplate a product liability, claim against some meals that you prepared? Probably not. So somebody may have coverage if they're doing this on a regular basis. And, even if it's a food truck or whatever, they probably have coverage. But sometimes you'll have an event and you've got folks that are setting up a table. They're selling their crafts or they're doing other stuff and they don't have any insurance coverage. They don't. So what do? Well, you either say you can't come if you don't provide a certificate, or you can say, well, you got to get event liability coverage. It might cost you $175, but it's the only way you're coming. And sometimes people can get together and they can not have coverage as the host of the event, but as an exhibitor. So it might be a little simpler from that standpoint. If you had a big event, and you were going to have tons of people there and none of them had insurance coverage, you might be able to get a really cool policy that I've written once in my life or twice, where we took all of these artists who didn't have their own coverage, but were participating in an event that occurred over the course of about 2 weeks. And we allowed them to purchase coverage on a master policy. But that was a unique event. And, you need to have a little bit of size, because it's going to cost thousands of dollars in total.
But just to verify, we should receive a copy of their certificate of insurance if they have it before the event.
Correct.
Okay, take note.
So 2 other interesting questions, if you can touch on as we conclude. One was, can we provide services to members with dementia? And the other one was discussing liability of members and volunteers regarding pets and service animals.
Okay, so dementia, what does your policy say? Does it exclude coverage? So do you want to read your policy? Of course you don't. You don't. Do you even want to search if somebody, young person, taught you how to search through a document looking for a certain word? Yeah, I found one of those people. He taught me the cool trick, so I can search contracts, PDFs, and find the stuff I'm looking for. So ask your broker. Look at your application. What did you tell the company you do? Is it excluded? It might be. Probably is not. If all you did was provide services and work with people that have dementia in a really kind of long-term, stage, that might become a little less interesting for an insurance company. But what's typical? What's typical, I think, you guys are closer to the villages than I am, is you work with people that are pretty with it. They're together, they're sharp, they can do a lot of things, but they might just be
They know how to search a document, yes.
I'm sorry?
They know how to search a document, to your point. They're with
Okay, great. Right. So, so what was I saying? That, yeah, the dementia thing. So what does the policy say? Are there exclusions, et cetera? What did you put on the application? What did you tell? So typically villages are working with folks that are perfectly capable of doing almost everything. Maybe they can't drive, maybe they lost their car. Maybe they're just alone. So you're checking in with them. So, maybe you're taking them to the doctor. Now you're getting to situations where the level of care is becoming greater because they can't manage their medication anymore. They forget to take their pills in the morning. Guess what? I talk to my mom 365 days in a year. Oh, you're calling me to take my medicine. Yeah, yep, okay, whatever. So there are varying degrees of exposure based upon the types of population that you're serving. So, but again, the key is, what does the policy say? Does it limit it? Does it exclude it? Animals. Covering organizations that deal with animals is more difficult than it was 5 years ago, 3 years ago. I don't know what actually triggered it, but clearly I believe it's claims. So there is more concern about animals than there used to be. What does your policy say? Is it limited? Is it excluded? Did you tell them? Did you ask them? So if you say, if I said to one of my insurance companies, I got this village, they go out and see 1,000 people a year. Those are the touch points. And probably in 5% of the cases, they may take a dog with them or a cat. The dog doesn't have a history of bite, of attack, and whatever. It's the owner with the dog who's had the dog for 5 years. They have no concerns. It's not a pit bull or something else on the list, which they consider to be more of a concern. I have a feeling the insurance company would probably say, we're okay with it. But I put it in an email and it's in writing and it's being retained.
Okay. We're at the end of our time. I think we'll stick around if anybody else has more questions, but these are the next steps. We are going to send you a follow-up email with a PDF of the slides, a link to the recording, and additional materials, as I just mentioned from Rob. Here is his contact information. It will be in that follow-up email, but if you want to snap a picture of it, feel free, or write down anything that you see right there. So thank you, Rob, very much for this great explanation of the policies that are out there, what may be needed as you go through the different stages of village growth. I also want to thank my VSN network here, just in terms of putting this all together. Katie Ostrowski did a lot of work in the background, as did BT Thomas, sorry about that. So we are always at your disposal. A few of you has asked a couple questions in the chat about getting in touch with us on some of our policies. So feel free to do that. So thank you very much to all of our attendees, as well as to Rob. And so this is kind of the official portion over with. There was a couple other questions, maybe they've been asked and answered in the chat, about liability for referring members to a list of independent service providers where members then call them to do work for them. And Kathy said, we think you touched on that when you talked about professional liability.
Right.
But
yeah. Whenever you're doing information referrals, et cetera, yeah, there's a potential exposure there. It didn't go well, or you referred me to a contractor and my house caught on fire after this electrician came in. And then my question would be, well, one, why was he on the list? Why was she on the list? And two, did you get a certificate of insurance from the contractor showing that there was liability coverage, work comp, auto, et cetera? So, I mean, some of these things, you're going to be like, okay, I got it. You said that before. Yes, we should be asking for insurance coverage for certificates. And sure, I had a guy come out to my house and I said, I need a certificate of insurance. And he goes, why? He goes, I have insurance. I said, I believe you. I just need to have a copy of your certificate. No one has ever asked me for that before. I said, I cannot believe that. I don't care. I want a certificate, or you're not coming to my house, you're not doing the work, and I'm not paying you. So he got me a certificate.
Okay, so we had it. So if you ask the right question, they will come forth with it.
or
Okay.
not.
I did not know that insurance was going to take up a full 90 minutes. I'm very happy that it did. And the Q&A, I think we've covered all of the questions that were sent in advance. So those of you that weren't able to attend, and there's a few of you, you'll see those as well. Any remaining questions from anyone?
Not a question, but I want to say before everybody leaves that the folks at VSN over the last week or month have been extremely helpful at making this a much better presentation than it would have been, and hopefully everybody agrees. Those folks have been terrific to work with. Thank you for all your help.
Pictures are an amazing thing, aren't they? On a slide deck, slip and fall, and other, the horror of the email sent to the wrong person. Yes, no, it was fun for me to go through that
Good.
process with you.
Good.
Nice job, you guys. Thanks.
Thank you very much. Sorry we can't provide you the master policy that you're looking for, Owen, but we'll take it up at Vita VN, I think.
I just wanted an easy route,
Yeah, the path of least resistance. I get it. Okay, I'm going to stick around. I hope some of my VSN folks and Rob does too for a quick debrief. Otherwise, we'll probably stop the recording now, and then we will get this out to you. So thanks everyone for coming. I hope it was helpful, informative, and useful for you as your villages grow and expand.
Thanks very much, folks.